Let's bring in Malcolm Ethridge now of Capital Area Planning Group and Shannon Sakosha of NB Private Wealth, both CNBC contributors. Malcolm, you first, because you do hold Apple. What do you make of these reports? And the question that I asked Steve Kovac, at what point do you say, as an investor, you know what, maybe this is just going to be different than I thought?
Yeah, Scott, I've been making the case to you for a while that Apple has to do something to justify this run-up that's happened. You know, all the questions about, is it overvalued? When will they finally deliver? I think that realistically, this quarter report that's coming isn't going to do anything to help Apple out in that regard. I think that we're probably going to see a sell-off in those shares either leading up to or right after that earnings report, because nothing meaningful has happened to convince the world that Apple Intelligence is really going to be the game changer that we're all hoping it's going to be. But I'll also say that it is very important in the first half of this year that Apple does actually come out and show us how meaningfully important Apple Intelligence is to the ecosystem, simply because we need that as a read on how much demand there is from the consumer side for these AI tools that these companies have invested so heavily in, because up to this point, all of the developments have been on the enterprise side.
Shan, rough week for the NASDAQ, to say the least, made worse today, obviously, by the rise in rates. What do you make of that?
Well, I think it's two parts, Scott. I think coming off of, really kind of a run to the finish, if you will, for some of these stocks. And so, I think there has been some risk mitigation going on. I think there's some pairing of positions. If you think about for taxable investors, there obviously have some concentration in these names, even in and outside of what they might own through an S&P 500 conduit. The other thing is that we're in a scenario where we are getting a little bit fearful about rising rates, and there's a number. It's a multifaceted rationale for why rates have risen the way they have, and it's really on the foundation of economic growth. And so, if you're anticipating that there will be continued economic growth, if you're looking at an environment where you're higher for longer, and you're looking at the lofty valuations for some of these names, there is some of that vulnerability. And again, it's not just that we're concerned about kind of relative to other stocks in the S&P 500, earnings are still going to likely be stronger, but there is that deceleration. And so then you start to hit that inflection point where you look at your portfolio, you want to maybe trim some of those names, and you're a little bit concerned that earnings growth is not going to be quite as robust to justify these valuations with the headwind of higher rates into the middle of the year.
I know, Shan, but why doesn't good news just rule the day? I mean, at the end of the day, I think you hit it on the head. I mean, the fact that if you have a stronger economy, earnings are likely to be better. There still is, I don't know, the narrative doesn't seem to have changed really over the optimism about an incoming administration that's going to have tax cuts and deregulation and just an overall better feeling about where maybe things can go from here. Sure, it's a momentary upset, it feels like, because of the direction of interest rates and what it might mean for the Fed and what it won't do.
Well, equity investors, Scott, they're always looking for everything to be a tailwind, right? They're looking for the tailwind of economic growth and deregulation, M&A activity pickup, and lower rates and lower inflation. So, I mean, I think for us, when we look at the year, we're really constructive on equities still. But we acknowledge that this first quarter in particular might be choppy. So taking advantage of perhaps some of this fear of the uncertainty, post-inauguration and some of the executive orders that might be put into place, I think, again, you hit the nail on the head. Good news can be good news, but right now, in looking at the valuations and looking at kind of repositioning of portfolios coming off of two really strong market years, I think that's why you're seeing a bit of this skittishness starting the year.